right, so my production assistant here, candidly just got us started right off the gate, right out of the gate here, on our quick little video blog here for you to get all the information that we couldn't quite get out to you in our last Zoom chat, our last live Zoom chat. Nicole's doing a wonderful job producing those live Zoom chats, and we're going to continue to do those each and every week. I'm going to try to keep an even pace here. I'm going to try not to go too fast for you or too slow, and I'm going to shoot for doing this in 10 minutes or less. What I'm going to do is I'm going to give you an overview of the SBA Loan Program. I'm going to focus on the CARES Act when I get to that segment, and then we're going to boomerang back around to the Zoom chat that we just did this last Tuesday, which was April 30th, correct?
31st.
31st, right? Mm-hmm. Today's the 1st. And so we're going to hit those questions. Rachel's going to chime in off camera here and read off those questions I did not have a chance to answer. So let's get rolling and let's try and keep with our timeline. So big picture here. Before I get started on the particular programs, I want you to be thinking with 3 of the very most important questions you should be asking yourself right now. The 3 most important questions are, number 1, how much can I borrow? You should be asking yourself, how much can I borrow? Obviously, you're going to want to know from which program. That was a lot of the questions that we had. I hope to answer some of those so that by the time I get back to this side of the board, that'll be answered for you, for your particular situation. Number 2, how do I spend the money? How do you spend the money? Now, the way you spend money is dependent upon the program you're taking advantage of or the program you're enrolled in. So that should become evident and perfectly clear to you by the time I'm done with this video as well. Number 3, how much will be forgiven? We all want our money to be forgiven, right? As little as possible that can be left in a loan should be your intent. Because the government is the factor that shut you down. It wasn't because of mismanagement of the business. So you should try to have the intentions of going into a grant or a waiver or a forgiveness program as much as possible. But let's get started with the big picture. Let's get up on a plane, 30,000 foot view. How does this work? The federal government has a division within it up in Washington, D.C., and it has branch offices in all 50 states called the Small Business Association Bureau, okay? The Small Business Association is a administrative department within the federal government. They give money to the banks, a portion of what the banks will then in turn loan you. So the banks have great security and comfort loaning you SBA funds, SBA loans. Don't forget about COVID-19. It has nothing to do with it, just real world, not pandemic world. The bank has confidence giving you loans because what they loan you, you're going to put 20% in. They're going to give you 80%. And of the 80% they give you, typically the government's going to back them on about 70% of that. So they have a very low exposure and a very little bit of risk. So this is why SBA loans are attractive for so many people. They're guaranteed by the government, they have longer terms, and typically lower interest rates than commercial loans. So that's the SBA. Now, the SBA has a loan program, and let's start with that. The loan program is called the SBA 7A Loan Program. Under the SBA 7A Loan Program, you can find multiple loans. There's business loans under the 7A loans, there's 504 loans, there's micro loans, and there's the Small Business Investment Corp loans. These are investment capital loans that can be used for purchasing equipment and supplies and whatnot. You can use these loans depending on your needs, depending on the business you're starting up, for startup capital. Now, one of the questions that came up in our Zoom chat was, Brian, are they offering lower rates and better terms during COVID-19 for us to become startups? I want you to grab this document that we had on our resource page because there is a link here called Resource Partners, and there's links to all the branches. You must call them, call your local branch, go online and find out, have any of these startup program loans been altered, been modified, been made more favorable for you if you're a startup practice owner? Honestly, we've signed up 4 startups in Meg Academy in the last 2 weeks. I really think that's going to be the fastest part of the rebound here when we come out of the COVID epidemic. I really think you're going to see a lot of businesses just really skyrocket. It happened after the financial crash. It's going to happen here too because the opportunities are going to be great for startups. Absolutely great for startups. That's why while you have the time, energy, and effort, get started on your career development training so you can start off with the most educated and highly trained, highly skilled staff you can. That's my advice there. Let's jump below the bar. Now we get into the, I don't know the best way to say it, the turbulent times or troubled times. They have special programs for that too. The first one here is called the Emergency Economic Injury Grant. The Emergency Economic Injury Grant is something that you do not have to pay back. It's forgiven. That's also in this program here for you to look up and get the details of how that works for you. This one's very popular. Many of us, when COVID-19 first hit, it was very easy for us to go online and go to the website for SBA, and we were able to file the economic injury disaster loans. I know I did. I know most everybody else I talked to did. Now, this program is one that you definitely want to enroll in, get your application going through it. You do qualify for it, and currently, as of 2 days ago, they put out a abbreviated version, a plus program on it, if you will, where they'll give you immediate funds within 72 hours, and that has to do with this program, the Economic Injury Disaster Loan Program. So there's the long application. It's going to take 2 to 3 weeks possibly for you to get your money and get approved. There's the short abbreviated version, which is 72 days, which is like 72 hours, which is like 3 days, and you should get, I think it's about $10,000 they're going to advance you. It's called an advance. It's an advance on the loan. So look into that, and that's currently up on the website. I was on it last night. It's quick and easy. Check that out. The other thing here is for non-disaster situations, okay? This is for your business is in trouble. It's on the ropes. You've been punched a couple times. You need to make some money quick to buy inventory or to shore up some staffing or to do some immediate diversification within your business model. You can go for the small business debt relief, and they'll help you with the debts you have so you can advance your business, okay? So this is all standard stuff. This is out there, and this is accessible to you. Let's jog over to what's actually happening now, which just got released as of last Friday. This is the CARES Act. The CARES Act, the big package in the CARES Act is the Paycheck Protection Program. The Paycheck Protection Program. Now I'm going to focus on that, and I'm going to hunker down here with some questions that were in this document so I can answer them for you. And I want to make sure that we're keeping in mind our 3 big questions. This is very important as a practice owner to keep these 3 questions in mind. So here's some of the frequently asked questions. What types of businesses or entities are eligible for the PPP loan? This is a loan. Now, everyone's talking about forgiveness. That's true, but it will come to you as a loan first. All right? And as I'm talking about all of these loans, SBA recently passed a rule that they're going to abate any monthly payments for the next 6 months, no matter which loan program you're on. You will not have to make payments for the next 6 months. The government's going to cover that for you. So just saying that was a new rule, and I didn't want to forget it because it applies to all the loans that you may or may not have, either what's coming or whether you have it right now or not. But when you get your PPP and you get your funds, who's eligible? Business entities must have been in operation on February 15th, 2020. So if you haven't been open and you weren't open for business on February 15th, 2020, you're not eligible for the PPP program. That's number 1. Small businesses, it can be as small as sole proprietorships. They can have independent contractors. They can have self-employed individuals. You still qualify. If you have more than 500 employees, you do not qualify. You're not considered a small business. Next important question. This page has several. So how is the loan size determined? If you were a small business open between February 15th, 2019 and June 30th, 2019, the maximum loan will be 250% your average monthly payroll costs. Now, the average monthly payroll cost, what goes into that payroll cost? I'm going to break that out for you, looks like coming up next. If you were not in business between February 15th, 2019 and June 30th, 2019, your max loan is equal to 250% of your average monthly payroll between January 1, 2020 and February 29th, 2020. So you see what they're saying here? If you weren't in business a year ago, just about, They're going to look at your numbers from January 1 to February 29th of this year. If you were in business a year ago, they're going to look at those. So that's how that's going to play out. What costs are eligible in the payroll cost? The costs eligible in the payroll costs are your compensation, such as salary, wages, commission, payments of cash, tips, and so on. Payments for vacation, parental and family medical leave, severance pay, pay for group health insurance premiums, retirement benefits, and your state and local taxes. Now that's interesting. This is what goes into making the payroll cost. That's what's going to be used to establish your baseline. So don't get confused. That is what's going to be used for that. What costs are not eligible in the payroll cost? Anything that you paid yourself as an owner that's greater than $100,000. Rachel, maybe you might want to move the mouse there a little bit. The screen went to sleep on me.
And you have 2-minute warning.
Oh my gosh. Compensation for employees who are not residing in the United States, and anybody who qualifies for sick and family leave credits under the Family First Corona Response Act. Now remember, the Family First Corona Response Act is to handle the people that actually either had family members or they came down with it themselves. They're not going to double dip. This is a big thing for you to know between these programs. You cannot double dip between these programs. Doesn't mean you can't have the PPP and you have the EIDL. You can. It's just that the funds that you have from this cannot be spent on the payroll costs that you're taking for the 8-week period in this program. So when you get this program, you have 8 weeks of payroll costs covered with this program. You can't then take the funds that you have here and say, oh, I needed those funds to pay those payroll costs. You already had it covered over here. What are allowable uses for the loan? Now that leads me right into what we were just talking about. The payroll costs, as I just talked about, cost for continuing health care, salaries, interest payments on mortgages, and rent, utilities. And this one's a little ambiguous, so you're going to need to call and talk to somebody at your local district. Interest on other debt obligations. I'm asking myself, well, does that count for lines of credit? Does that count for car loans that you have in the business, the interest portion of the car loan? I'd like to get some clarification on that. It does not state that here one way or the other. What are the loan terms? It's not going to be greater than a 4% interest rate, and it's usually going to be somewhere close to a 10-year term. That's the max. Whether it's 5, 7, 10, I said that in the Zoom chat, we really don't know. How do you get forgiveness from the loan? This is important now, so perk up, get your pen going. How you get forgiveness is that you must apply through an approved lender, which is an FDI-insured bank. There's 1,800 of these institutions nationwide. You can also go to a credit union. Your documentation must verify that your total number of FTEs on payroll and their payroll rates are equivalent or higher than what you did in your baseline period. Remember, they're looking at that period of time. They're going to, if you've been open over a year, they're going to look at last year's average monthly payroll and FTE equivalents, and then they're going to make sure that you have the same, if not better, or no greater than a 25% reduction in reducing of staff hours across the board, staff reduction. If they're a 40-hour employee, that you didn't cut people below 30. That's going to disqualify you. Any loan amount not forgiven will be carried forward, like I said, as a 4% interest rate and a 10-year term. You're going to need to have documentation to verify payments that were covered under this loan program. And you're going to need documentation to verify the number of employees on payroll, the payroll rates, including the IRS payroll tax filings for your state and local governments. So here's what I recommend. If you get approved for the PPP, make sure that the funds get deposited into a separate checking account and pay all the qualified expenses out of that separate checking account so that you can meet this documentation requirement very, very easily. That's pretty much it on that. This is a very important question that came up. How does the PPP loan coordinate with the SBA existing loans? All right, so a lot of people may have an existing SBA loan. You now get a PPP loan. How do you balance between these two? How do you justify that? Borrowers may apply for the PPP loans and other loans for assistance, such as the economic injury disaster loan. This one's going to be very common. Many, many people are going to apply for this and apply for that. I know I did. I think a lot of people are going to do that. You can do that. But you cannot use the PPP loan funds for the same purposes as this SBA product. And honestly, you shouldn't have a problem with that. Put this to the attributed expense buckets that it's meant to cover and spend this money on your other expenses that are not covered in that program. So there's my general rundown of these programs. I want to end off by just answering some of the questions. We have about 5 or 7 questions that Rachel has from the last Zoom session, live Zoom chat we had. So let me go ahead and try and bang those out, and we'll wrap this up.
Okay, so first one is from Sharon.
All right.
She asks, if the owners take draws and are not on payroll specifically, how do they fit into the PPP?
Okay, so if an owner takes a draw or a distribution, they must be logging it in their QuickBooks. Otherwise, it's embezzlement, right? So you have to have some record that you've been taking draws or disbursements or distributions out of your business. You can declare up to $100,000 of compensation to the owner, whether it comes in the form of salary, commission, distribution. It does not matter. You are eligible to get that cost covered under the PPP.
Okay, good. Next question from Dawn. Is there a max amount of PPP available to each business?
Yes, the maximum amount of PPP available for each business is up to $10 million. I don't think there's many of us that are going to be able to justify that through our payroll, but that is the max number.
Okay, good. Cool. Next is from Alan.
Okay.
Do we need to bring our PPP employees in for work on a normal week, even if we have no patients?
Yes. So here's the thing. The PPP's whole purpose is to keep your people employed, keep them getting a check. You may not have the work for them. This is where I'm coming from with what we already know. 85% of businesses that have a career development training program inside their business, they do better than all other businesses without. Look, you have to update your policy and procedure manual. You probably have compliance programs that you wanted to put in place that you haven't gotten to for a very long time. You probably have chart audits that you need to attend to. You probably have updated files and home exercise programs you need to get to. But most of all, you probably have training of your staff to get consistency, to get compliance with all of these things. Your HIPAA compliance. I mean, this is a great time to reach into us and let us connect you with Daniel Hirsch, his program, his company, to get you HIPAA compliant for the long haul. Get your tele-PT solutions up and running and appropriate for the long haul. It's not going to be the Wild West forever on an iPhone. So in my mind, there is plenty of work for your employees to do. But they have to come back to work, be on the clock, and then you assign them these administrative duties and responsibilities. If you're a MEG client, this is the time. Give them their bulk hours of training and hold them accountable to it.
Okay, I think this is the next one from Motion. What is cut off to number of employees to qualify for the PPP?
All right. You can be a sole proprietor and qualify for the PPP. You can have up to 500 employees and qualify for the PPP. That's the range.
Okay, great. Next is from Jeremy.
Yeah.
I had heard that the SBA and the PPP are linked and that there's only a certain amount that you can take, meaning $100,000. If you use $50,000 for the PPP, you can only have so much with the SBA, $50,000. So they are linked, or is this right?
No, that doesn't. I've not read that. I've not seen that. I mean, I could be wrong. I'm just trying to help you out here with all the research I've done. You will qualify for this program based on the application you send in. You will qualify for this program based on the application and information you send in. Now, you will probably get one approved before the other, right? Once you get them approved, the trick is you cannot use the funds for one to cover the same expenditures of the other, as I already covered. So I won't go into that and repeat myself again, but I hope that helps you. If you need more information, just jump on our next live Zoom chat and we'll take that up individually, or reach out to us at info@megbusiness.com.
Okay, good. The next one is from Christy.
Yes.
She asks about the coverage period. What is the coverage period?
Okay, so you could take, when you get approved for these funds, you're going to tell them what 8-week period of time you want those funds to cover you for. For me, I'm going to take April 1 all the way to June 1. I'm going to take April 1 to June 1 because I believe the downturn really happened in mid-March. I think the full impact of that's going to be felt in April. The fact that we're at the stay-at-home order all the way to April 30th, I think that's going to really impact May as well. I think that's the critical mass for most people to look at as a coverage period. Other people, you could go all the way back to as early as February 15th. and go as late as June 30th. So any window of 8 weeks between February 15th and June 30th is what I believe. I could be wrong. It might be February 1st, but I'm almost positive, 98% sure, it's February 15th to June 1st. June 30th, rather. Sorry.
Okay, cool. Next one is from Tiffany. One of our employees went on unemployment a few weeks ago because of compromised health. I need to rehire her back by June 30th to get full pay back to keep the head back.
Yeah, to get the head count back up.
Got it.
Good question, Tiffany. Good question. So here's another thing. If the person went on unemployment due to health concerns due to COVID-19, they're going to fall under the other program that came with the CARES Act, which is I don't have it in front of me, Rachel. That was the family...
the F something.
Yeah, that's right. It's the family... You guys, it's like the old FMLA. It's the Family Coverage Act for people who've come down with COVID-19. They'll be covered there, and I don't believe that's going to work against you because of that. I don't think that's how that's going to work.
Okay. And last question from Kimberly. Does the CARES Act allow for coverage of the owner's paycheck?
Yes, the CARES Act does allow for coverage. It's more the PPP allows for coverage up to $100,000.
Those are the questions.
All right, great. So I hope you appreciate this quick little chat. I wanted to catch up. I didn't want to leave any open questions. I hope this works out good for you guys. Thank you for coming to our live Zoom chats. Please keep doing it. Come to the podcast, subscribe. This is for you. This is all for you. This is what we do. We literally want you to pass our name around as the Google of physical therapy. That's what I'm striving for. So if this is helpful, give us a good thumbs up. Give us a nice review. Or just come and meet us at the next session and let's see what we can share together. And I really appreciate your questions because we all get to learn from them. So thank you so much. Get out there, and as always, expect to do well.